My name is Jeffrey Kennedy, and welcome to Elliott Wave Junctures. Today we're going to examine the guideline of alternation, and specifically we're going to apply the guideline of alternation to a couple of price charts, specifically two price charts, Akamai Technologies and Gold, and I'm going to demonstrate how it can actually help you identify wave patterns more clearly. Now, first of all, let's talk about the concept of alternation. That simply states to expect a difference of expression in a similar wave. And the best or the most notable way we actually apply alternation as Elliotticians is within impulse waves. For example, in this slide right here, this is Coca-Cola. We have a move to the upside, waves 1, 2, 3, triangle 4, and then our final move up, our fifth wave advance. Okay, now what we're going to be looking at with respect to the guideline of alternation are waves 2 and 4. These are the expressions of similar waves, or the difference of expressions in similar waves. In this instance here, wave 2 is a zigzag, and that is referred to as a sharp correction because sharp corrections do not allow for a new price high, where a triangle or a flat, and sometimes double and triple threes, actually do. For example, in this instance here, the new price high is wave B, or in this instance, because this is a running triangle, wave B does indeed end beyond the origin of wave A. So this is a sideways pattern, this is a sharp pattern. In other words, the guideline of alternation with respect to motive waves, or specifically in this instance here, an impulse wave, is that when wave 2 is sharp, wave 4 will most likely be a sideways affair. That will be a flat or an expanded flat or a triangle. Okay, if wave 2, on the other hand, were, say, a flat correction, an expanded flat, in other words, if wave 2 was a sideways move, then we could look for wave 4 to be a sharp correction, i.e. a zigzag. Okay, now the way this actually helps in our wave, or allows us to confidently label waves more clearly, is, for example, in this instance here. Here we have Akamai Technologies, and because we have the alternation present, it allows us to more confidently, I think, label the structure. For example, we have our initial move up for wave 1, a zigzag or a sharp correction in wave 2. Here's our wave 3 top, and as you can see here, we have a flat correction, 3, 3, followed by a 5. That allows us to actually identify, again, I believe more confidently, this final move up as a fifth wave, versus if this move to the downside were a zigzag and the subsequent move down were a zigzag, then that would possibly open the door for, say, a 1, 2, 1, 2 count to the upside. So in this issue right here, it does appear from, say, last year's mid-year low, the 2012 low, I believe in early June, that we actually have 5 waves up and done, and I think it tracks nicely because we do indeed have that alternation present. Now let's look at how alternation is actually applicable to also corrective waves. Now typically whenever you're experiencing, say, a correction, a flat, what you'll sometimes encounter is, say, for example, in an ABC structure, wave A will be a flat correction, in which case you'll be looking for a zigzag to take the shape in wave B, or vice versa. If wave A were a zigzag, then you could look for wave B to, say, be a flat. Another way we look at this, or another way I work with this idea of alternation within corrective structures or corrective wave patterns, has to do with complexity. A lot of times what I've noticed over the years is that when wave A is a very singular price move, wave C will clearly subdivide into 5 waves, and vice versa. For example, if you have wave A subdivide into clear 5 waves, then, or 3 waves, then what you'll see is more of a singular price move in wave C. Now here's an example in Ford Motor Company where you had a single price move. Notice how vertical that move was. It was just a straight shot to the upside. That's a very singular price move. That's very simple. Now if you look at your wave C, though, that was actually laborious. I like the slope of it as a wave C, certainly contained within parallel lines, but the substructure of that wave C is clearly identified in 5 waves. That again allows me to identify this as a counter trend move more confidently. Now if we apply that same logic to the recent or current price chart of gold, you'll see something very similar. The initial move to the downside was very simple, or a very singular price move. Then we had our 3-wave counter trend move back up, and then we see a down, up, down, up, down sequence, a 5-wave structure for what most likely is a wave C. That being the case, we could actually be looking at a tradable low in gold as the January low. That would actually point prices higher in the weeks to come. And this is how we apply the guideline of alternation, not only to help improve our wave counting ability, but also to identify trading opportunities. Thank you very much, and have a good day.